Yo,
So,
what's up? It's me. Hold on. Let me get more people in here.
oh, you good, you good.
Happy Sunday. How you doing?
Good, good. Just running through some things, looking through some charts, disputing Wabi in the chat.
Who?
One of the guys on the team says Bitcoin. Just
Um,
mess with him.
Luna. Shh.
I gotta re-download my cut software, man.
Oh, really?
Yeah, I removed it before. I had like the editing software. I need to bring that back in. Yeah, let me throw in the other one too.
The man is in the house.
How's it going?
Yeah, good man, good. Pretty excited.
Yeah.
What's up?
Try again at incomplete. Pretty good
That
coverage by
profits there.
Google over there.
Oh, he
But he has
profits
good
there.
pressure. And the pressure is what caused that ball to sail. Comes in the
Mute that motherfucker.
He's going to run. Kaminsky's just going to run the right corner. John Feliciano right into the lap.
Alan, your mic's rolling, bro.
Thanks
Playing
for having us,
football.
Profit.
You're welcome, fam. We're gonna wait for a few more people to pull up and then we'll get started. Thank
Yeah,
you
thank
for
you so
the
much.
amazing, of course. Thank you for the amazing modding, William. I can't mute anybody. You need to mute everybody.
Oh,
I'll
my
mute
bad.
myself.
Hold on. I got you. Look, you gotta
We're
tell me,
looking
man.
like noobs. Marty's making fun of us. We look like noobs.
Uh, how do I promote to whatever? I forget how to do that.
I don't remember either. I don't like Zoom.
Yeah, it's just I have the paid version, so I figured why not.
No, you're good. You're good. It's perfect.
Uh, I think I can only make you host.
No, it's cool. It's cool. It's fine. It should be fine. I don't think we'll get any weirdos in here.
Okay. Yeah, as long as we don't get nobody crazy in here, that'll be cool.
You guys
Oh,
should send this out to your friends as well. Um, the point of these are to get you understanding the markets a little better as far as reading the charts, not to turn you into a professional trader overnight, but
exactly.
to be more comfortable with it, right? It's like learning a new language. If it's not your first language, it's a little difficult. So that's the point of this.
Yeah, it's to keep you calm when storms are hitting. When people are telling you everything's over, it's all over, blah blah blah. You can look at the charts and kind of evaluate it yourself. This is why I tend to not like trade off anybody else, man. I can't listen to other people. It's crazy.
I'm gonna give it like a minute or two, and then we'll jump right into it.
Okay.
Yeah. You just did.
We're just letting the room fill up for those who are just getting in here.
Buenos días.
How's it going, Madonna? How you
Hola.
doing? Oh yeah, yeah. Profits. Yeah. Yeah. Again, just to kind of reiterate what Prophet said earlier, it's not to turn anybody into a professional trader or tell you guys, hey, go out and trade down your portfolio, because that's probably what would end up happening if you just started trading. It's to get you guys more in the comfortability of looking at price and being able to read, am I in a bad place or am I in a good place? Is this a place where I'm feeling too much FOMO, where I'm feeling too like price is too high, or am I feeling like there's a lot of fear, a lot of opportunity?
Get your notebooks out. Put your thinking caps on, ladies and gentlemen. Thank you for being here. Share with a friend if you'd like. All right, Will, you can get started whenever you're ready, fam. Thank you.
Yeah, for sure. Uh, just so everybody knows, this is put together by Profits. She pressured me into getting in and doing this with you guys.
That's right. If you guys want him to eat dinner tonight, we need to make sure he performs well.
Bon appetit.
Yeah, it's gonna be interesting. Honestly, like I was kind of just chilling on Twitter for a little bit, and then I was just like, all right, I'll do it. So yeah, so we're gonna kind of get into a couple different things today that are kind of important in my book. Again, everybody's trading doesn't have to be the same. I want to iterate that right at the beginning, because I feel like a lot of people, they want to look at a particular style, even mine, right? Like, you don't have to match my style of trading. You just have to understand basics. I think once you get basics down, you can kind of figure out your own purpose for trading, or your own style for trading, per se. I never bash people based on style, but I will bash if you are telling people, hey, it's over, or hey, we're going to 500K Bitcoin, because like nobody knows that information, guys. Like, the over scenario, we can negate that, we can discuss that, but that's when supports break, right? The 500K Bitcoin, like, where do you get that number from? If you can explain it to me, I'm all ears. I usually try to do things from a more down to earth logical standpoint. I do think that and we'll kind of touch on total, just to kind of give you guys kind of a way to measure an asset against, like, liquidity and stuff like that, because that's another way to do it too, is your totals can help you figure out what liquidity looks like in crypto, and help you kind of figure out what's going on in crypto, and where money flow is the heaviest, right? And where reversals may occur, yada yada yada, all that stuff. One thing I want to kind of get into a little bit here, and this is where a lot of fear sets in a lot of the time, is people, and if you guys hear any background noise, my apologies, my window's open, I just like fresh air. A lot of people, they'll look at certain things in the chart, and they'll try to pick, like, kind of like what's going on. And I'm talking more based on the candles. So you see, I have a red chart, red, green, and I have my chart. I tend to change my colors on mine just to help me with the mental notes. So that way I'm not looking at this thing and saying, oh, this is where I need to sell, or this is where I need to buy, based on candlestick colors, right? And if you noticed, I actually reversed my colors. So I made my dark color, which tends to be your down, my up, and I made my light color, which tends to be my up, right? My down. So that way, in my mind, when I think dark light, and I didn't change colors as far as green, red, because that'll just confuse you and confuse others, but I changed a different color altogether that I liked, right? You can do that within the settings, so on and so forth. But I changed this color to help me with my mental, right? Mental can be a big thing when it comes to trading. It can help you get a better place, or figure out what's going on in a specific price area. I think that's very important when you're looking at these markets as a whole. So one thing we have to look at is, we have to look at, we'll discuss candlesticks, and then we'll get into like structure and stuff like that, and like support resistance, because I think those are important. I'm pretty pretty seasoned at identifying those, whereas a lot of people have a hard time identifying support, resistance, and all stuff like that. So I like to, again, I like to tend to go on the higher time frames, figure out where things are there, and then I like to dial it back. But from a candlestick standpoint, you can see here, structurally high time frame, you got a big wick, right? Got a big old wick right here. That is indicative typically of a huge rejection, right? It's basically price eating to the downside, and it means no, 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 come back, right? And then you come back, you try and retest, no, 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 come back. And this can create structures of lower highs. And then you got to also look at your bottom structure and say, is my bottom structure matching my upper structure? And if it's not matching my upper structure, what structure am I seeing overall? So you always look at the wick as kind of like your market sentiment, right? Sentiment. That's what I like to look at it as, because true price is not the wick. Some traders like to trade off wicks. Some traders like to trade off bodies. I'm more of a body trader, but I trade wicks when it's convenient. Now, that may sound a little off, and you may be like, well, that doesn't make any sense. You trade one or the other. It just depends. It depends, right? It depends on what you have going on and where things are. So overall, if we were to look at this from this standpoint, you would look at this wick and you'd be like, all right, this is very bearish. You had a heavy rejection here. Price may come back, right? And then so what did price do essentially from this bearish wick candle? And then you get the bearish hammer right here. This is a hammer, by the way. Why is this a hammer? This is a hammer because you had the big wick and then you have the little head right here, right? Yes, you have a little wick below. You could say, oh, this is a doji, yada, yada, yada. I'll just call it a hammer. Majority of price happen up here, a little bit of pressure here, but you're going to ultimately come back and recapture a lot of the price. Now, if you look here, you came back and you retested price, right? Where did you retest price at? You tested it back in previous liquidity, previous support. And again, this is why bodies fit here, because if you look at bodies here, you have really good support here for multiple weeks. And then all of a sudden you're starting to lift off that support, right? You're starting to create this uptrend in a sense. And this is why you have to always kind of look at the area for context as far as where you are in the chart. And kind of like, all right, what do we have going on here? What do I see? And then from here, you can kind of identify what's going on. So what I like to do is I like to pick apart certain areas. So this is like kind of like what I consider a run or a move or a sweep or, whatever you want to call it. It's a market, move out of a liquidity zone. Now, what do I mean by out of a liquidity zone? Well, our previous liquidity zone essentially, and we can ignore this because this wasn't really it, really lied between here and here, right? And so what did the market do? Well, the market tested liquidity here, saw there was an interest in going higher here, then came back, swept your longs, and then ran into that liquidity zone. Now, I did this based off of specific candles, right? It did this off of basic liquidity. And you can see here, I didn't even look over here to the left, but look at this. Look at this. Again, it's test on test on test. And now you'll see right here, the same move right here that they did right here, they also did right here, right? So they came back, they tested liquidity right here, and they were like, all right, is there liquidity interest above here? Yes, there is. All right, sweep low, come back, reject, come back. And again, it's just continual over and over and over again. You'll see right here, you're getting swept to the lows, right? But at the same time, while getting swept to the lows on your candlesticks, you're also getting swept to the highs. And this is what a lot of people ignored. They kept looking at the higher or lower highs, and they weren't looking at the higher lows. And what this is, or this tends to be, is a pennant, right? Now, a pennant after a run is indicative typically of a continuation pattern. Where can that reverse? Well, that can reverse the second you break to the upside, right? So the second they broke liquidity here and swept, you now are going to trade back up, right? You're going to dip, but you're going to trade back up. And that's exactly what the market did. It knew there was liquidity up here because it swept it here and it came back and rebalanced it over here. Now, how did you know they were going to go higher? You knew they were going to go higher because they swept over here too. Again, it's all about the sweeps, right? So you get this sweep here. If you look here, like that sweep is what created this consolidation, right? So this consolidation specifically, and I'm on the weekly just for those of you who aren't aware, right? This sweep created this consolidation right here. This sweep right here created this support up here. It's basically where liquidity came in and ran. And this is why you can use wicks to kind of fit, whatever you got going on versus body. But the bodies are pretty clean down here on the lows. That's why I tend to like to swing it up there. But in reality, you can see here, if I bring it down to here, they kept tapping this liquidity at the lows and bouncing off. They're using it as support. So arguably, this is where you're going to kind of stall out for downside, right? So should you be short here? Arguably, no. Absolutely not. If you are looking for shorts, those should have occurred up here. Why would they have occurred up here? Because you could have shorted anywhere under that resistance. So the second they swept into this area and swept back below, you could have taken a short, right? Now you keep in mind they swept back in again, right? But then you had the lower high. So this is the hard part is, am I going to get knocked out of my position? Sometimes you are. Sometimes you are. So you may have got knocked out here, but you could have caught the lower high, let them sweep back below again, and then short again, right? So you're going to get knocked here, probably, unless you are not running really high leverage, then you're fine. But if you're running high leverage, you're probably going to get knocked here. And then you're going to kind of short again the second you come back below resistance / support. And then you could have taken all this downside back down to the low, swept the low right in here, all the way back to over here. Like this, the process here is I'm teaching you guys kind of like trading a little bit, but I want you guys to understand structure. That's the more important part here that I'm trying to point out. I'm just teaching you kind of like how I would have played this versus like, a lot of other people. Now, with that whole point, when people are calling like, oh, it's over, this is the top, right? You have no structural breaks yet. So it's absolutely wrong for anybody to call a top here. Absolutely wrong. You had the violation of the high, which is great, and it would have been great to have a close up here, but we didn't get it. You wanted to see a close up here because if you would have got a close up here, your run position would have been all the way up here. Now that will come. It will come. I think it'll just come later, right? But one thing we're seeing in this market is we're continuing to see this trend play, right? This easy uptrend play. Now, can there be a sneak, basically kind of run? Sure. I mean, at some point they could do something like this, maybe run it down a little bit, maybe kind of like wick down in here, make people think it's over, get below support here or the trend, and then come back above it. And you could rebid the trend up if you wanted to, or take entries if you were fearful of downside. This is where you would get out. You get out the second you broke trend, or you can get out the second you break support, right? You need high time frame support to break though, not low time frame support. Low time frame, hourly, 4 hour, H4, H1, so on and so forth. A lot of guys like to use those terminologies because they want to trick people into thinking they're smarter than they actually are. H1 is just 1 hour, H4 is 4 hour, H8 is 8 hour, and then you got your 1D and all that stuff like that. But anyways, outside of that, this is kind of the play up here. So I'm using Ethereum specifically because it had a really good structure that told you what was going to kind of happen ahead of time, right? A lot of people got played because they basically weren't paying attention to the bottom, the whole overall support here. And this is where like even the guys like that I trade with me, I kind of got into it with them a little bit because I was like, dude, look, before we even got to here, right? Before we even got to here, I was like, you have a clear as day trend support here. Like, I don't care if you call it a normie trend, whatever you want to call it, continue to play the trend until it's done. And so they were arguing that price is going to break here. absolutely chatted off that position. Absolutely chatted out that position. You can see right here, it was literally the bottom of the move. I have the timestamp post on this. I'll post it later, but these are all kind of areas that you got to kind of watch. And how do you know you have interest, right? Well, I can tell you this: fake interest tends to end with no wicks, right? Real interest tends to end with wicks. What are we seeing right here? Seeing a lot of wicks, right? A lot of wicks. So again, you dip, you buy, you dip, you buy, you dip, you buy, you dip, you buy, and rip, right? And then liquidity, liquidity, liquidity. You dip, buy, dip, buy, dip, buy, dip, buy, dip, buy, and you're in an uptrend, right? These are important things to kind of pay attention to. Now, I'm not saying that you're buying all these positions, but I'm just telling you what's happening on this trend, right? Is these areas of liquidity here on this trend are being bought, they're being purchased, and that's what's causing this uptrend momentum of price. One thing that a lot of people didn't really pay attention to, ETH did something a little bit different this cycle, but it's usually a double tap bottom, right? So ETH, you can see right here, came down, touched its low, bounced off, ran up, came back, touched its low, and it doubled over here and then ran. This time it ran down, doubled over here, touched its low, and really I think like what we're going to start doing is trading directionally like this and then kind of trading out. And that's just based off of previous price action, right? Another thing too that a lot of people miss is they miss the easiest patterns. Look at this. I mean, that's an easy W. For those of you who don't know, W is an easy play for massive upside. And arguably, I would say what we're looking at here, a lot of people are probably looking at something like this, but I don't think it's that at all. I think it's more something like this. And that's your trend. Again, it's another W just in a different format. And that's what a lot of people don't really pay attention to. They got to pay attention to these things specifically. These are important areas to look at price, important ways to look at price. Because if you continually look at it for, this wick means this, or this week means that, or this time frame means this, or this time frame means that, or this liquidity zone means that. None of that exists. None of that exists. The only thing that exists is, did I hit my price target? Yes, boom. Okay, wait, see, consolidate. Am I breaking support? No. Okay, I need to hold my position. And that's why I told people, I was like, why are you exiting now? Why are you exiting now? Because like nothing's broken. No support is broken. You got people on Twitter right now getting PTSD, literally losing their mind, saying this is the top. Yeah, I don't think that's the case at all. I think that if you look at price and the way price has been reacting, follow the money, right? Follow the price. Price has been continually in an uptrend, I don't think this is a difficult process to understand here. Now, granted, if we broke here, right, and this did end up peaking here and ended up being something like this, I would expect a green close, just like this, right? Because you always want to false move the breakdown. So you want to bring this back up on the wick a little bit, get people enticed, and then take it all away. That's how you want to do this, or you want to play this, or the market maker wants to play this. They're not going to come in and make it super bearish here and then take it all away after they make it super bearish. They're not going to give you the obvious play. And I think that's where a lot of people get played in these moves, because they're looking for the obvious play and they're like, oh yeah, that's not going to be the play. That's going to be the play I'm going to play, because that one's the one that looks like something they would do. No, they tend to do the opposite of what a lot of people say. They tend to do the opposite of what a lot of people say. And this was the same discussion I had with Bitcoin. When I discussed Bitcoin over here, a lot of charts open. And I talked to people about Bitcoin, and I was like, hey, I don't think this is gonna do what you think it's gonna do, and it's gonna actually go the other way than a lot of people are thinking. Everybody's like, no, 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 no. And remember, price was here. Price was right here when we were talking about it, guys. Where's price at right now? 42. 42. And now everybody's pretty silent. Everybody's pretty silent right now, because they don't know at this point, because they were wrong, because they didn't anticipate both directions, right? They only anticipated one direction. Never get in that mindset where you're like, okay, this is the only move they have. Never get in that mindset. Always get in the mindset of, okay, if they're going to break here, it's going to be breaking into here, right? If they're going to not break here, it's going to be supporting into here. So what should I be doing here? Well, I should be bidding, right? AKA spot position. I don't care how long it trades here, right? And it didn't trade here very long, but spot position, spot position, spot position. And then when they go to rip, you're good, right? But if they do the opposite, you can always cut positions later at a loss. And yes, it's a loss. But like if you're trying to trade, this is how you would trade it, right? You would trade it here. And where's your downside potential? Well, your downside potential, in my perspective, again, you got this consolidation. This is not a run. This is a run. This is a run. This is a consolidation run to the upside, consolidation run to the upside. And then you got to run a run and you got to rebalance, right? It was expected the entire time that you would see the rebalance back to the run, right? Run, rebalance, rip. And that's what we're seeing. That's exactly what we're seeing live right now in everybody's face. Now, what will we probably see here? We might see a little bit of, them playing around with your heads, dip it down, right? People think that it's over. And then you get the higher low. And then pull it back up higher. Shorts are going to get obliterated in here. And so are longs, because I think people are like really high leveraging longs. So my perspective is play the spot, right? Play the spot. Don't play the leverage right now. You're going to get wrecked. But ultimately, I mean, the goal is pretty easy, right? I don't even know, like, half the time, guys, like, I scare myself when I look at these plays and they play out, almost to a T. But it's just, I have to come back to the drawing board and be like, I don't at all try to be overly cocky with my trades, but I know that it's more due to experience than it is due to me just getting lucky. And that's what I try to tell people. I'm like, you got to have the experience. It's not about guesswork. This isn't guesswork. It's time and effort, right? You got to put in the time and effort if you want to take these plays. But ultimately, your support was here. Your bid was here. I even bought here. I posted it. I showed everybody like, hey, I'm buying right in here. And then boom, we're up here, right? Now, what we'll probably see is some consolidation. Now, what are we looking for here? We're looking for the same thing. The second you came back above here, what are you doing? Does anybody know what we're doing the second we come back above this line on the daily? Anybody can unmic. Sorry, I like to interact with you guys and girls.
Repeat the question. What was that?
So what happens the second you come back above this line right here?
You're going to come back to retest it, or somewhere
you
near
could
it.
be, but what happens the second you get back above here? What should
got a new floor.
You broke
It
market
becomes
structure.
support.
It becomes support. There you go. You hit the
Yeah.
nail on the head. That's what you're always looking
Yeah.
for ideally is the support range, right? So you're always trying to identify that support, that resistance, all that good stuff. So this was support that broke, and then it came to the next support, and then it became again support, right? So it never held as resistance. It never did. Now, what do I mean by that? Look, price broke out, consolidated, broke down, and came right back through. There's no resistance here. It's going to stay up here. This is where we're trading now. We're trading here now, and I'm giving you a lower time frame, right? So I took the HTF, which is your high time frame. So when you hear that, LTF, your low time frame, I took the HTF. I found my areas of liquidity, right? And I dialed it down from there. Now you can see right here, this same area, this purple area. What do we see right here on the monthly? Anybody?
Support.
It's support. That is correct. It's support. And right here, it was resistance, right? And then it broke back through, used it as support, and ran off of it. So since this is a high time frame support, I can then break it down from here and go into the weekly and say, okay, this on the weekly, look, resistance, 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 resistance. It's not the most obvious support. That's the thing. A lot of people don't even realize sometimes you're looking for the least obvious support. You're looking for the area that nobody's looking at, because a lot of people are probably going like this and looking for a swing into there, right? Because didn't you hear a lot of people saying 37.5, 37.3, 37, 36, somewhere's in there? Because they were looking for a retest of here. They weren't dialing down. They were going to a specific time in the chart and they were using that as their support. When ideally you want to take your high time frame, dial it down, see if it makes sense. Now, where else did I get confluence? So what's confluence? It's other areas in the chart that match and give you kind of more support or more strength to your thesis that that is support resistance. Again, your confluence one would be right in here. Resistance, right? Confluence two, right in here. Resistance. Confluence three, right in here. Resistance. Confluence four, consolidation sideways, right? Now, how and why do I consider this consolidation, even though it's green, 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 green? Because look at how much time we spent here, right? Look at the time period. Time consolidation is the same as consolidation. 1, 2, 3, 4, 5 weeks, then breakout, right? So you had all this move, just chop, grind, chop, grind, chop, grind, chop, grind. Do you see what I mean? When you look at this chop grind, you see how that can create a support for liquidity? This is what a lot of people like, and you could tell when people have a lot of experience when they don't, because they understand these type of plays right here and they understand, okay, this right here can create support because of the chop and grind that they did here to get to here, right? The real breakout of liquidity. Then they got back up to the upper ranges of liquidity. So now that we're back in the upper ranges of liquidity, we should expect some kind of pullback to the liquidity and then a break. And that's what we saw. Now, if we were to break this down on the daily, again, same thing, right? It actually looks a lot better. You get a lot of price action. You're just slowly but surely coming back up into the range, and then boom, everybody's interested again, right? This is your spike in interest. This is slow and gradual accumulation to the upside, which then becomes later on support for the downside. And you can see that by the wick. By the wick, guys, right there. Right? The wick defines all. The wick tells all. So you had the big wick rejection, and now you're getting this big wick support. Now, here's the trick. Here's the trick. They could trade this for a while, right? They could trade this for a while. They could even sweep back into here, retest it again, and break out later. That's the part where a lot of people get played because everybody comes in later on, right? And where does everybody ask you where to buy? Let me ask you guys a question here. When somebody comes to this chart, when we were here, right, trading here, like literally days ago, 4 days ago, did anybody come in here and ask you if they should be buying? Does anybody know anybody who asked them if they should be buying when price came into here? Or were they saying they were buying lower? Anybody?
think they was waiting for lower.
Yeah, a lot of people. I can go on my timeline and look through people that literally just said I'm gonna wait for 37 and then 33 and then 30. Okay, you're waiting for 37, 33, and 30. Where's support? It's above 37. Well above 37. So again, they're looking at the wrong areas. They're looking at this area of liquidity, right? Again, They're looking at the consolidation high here, not the wick highs here. They're not looking at previous price over here, and they're not looking at high time frames. They're looking at low time frames, and they're staying on the low time frames. Always dial back from your high to your low. Your high to your low will help you kind of dial out the noise. It'll really help you dial out the noise. Again, expectations were, look, if you take this from a high time frame standpoint, look at Bitcoin. Look at how beautiful this play is, guys and girls. Look at how beautiful this play is. Like you, like people saying it's hilarious. It's actually hilarious. Look, I'm gonna show you 2 points. Rip, consolidate. Rip. Rip, consolidate. What do you think's happening here? That's all it is. That's all it is. You're basically at this point here. You're working your way out. Look. Right there. Look. Right here. This is why high time frames help so much. They're not going to give you trading positions, but they're going to help you understand, right? And then once you understand, then you can dial it down and get better positions, right? You can be like, all right, well, if this is the case, I'm expecting this. Why am I selling here to buy here on the high time frame? It makes absolutely zero sense, in my opinion. All right. Some people may say different. 0 cents to be doing that. These are important things to keep in your mind when you're looking at these markets and you're like, okay, well, Jack over there with 350,000 followers told me that this is coming down to like 12K, so I'm gonna wait for 12. Don't listen to Jack. Like, don't listen to me, right? Just literally just pull up the chart. What's that?
Yeah, I remember you said 12K.
At one point, yeah, it made sense in the chart if you looked at liquidity right down in here, and that was when we were like up here though.
Yeah.
And I told you guys like start dialing at 17, right? I was like 17, 16, 15, and I remember people were like, well, I'm just gonna wait for 12. I was like, no, I was like, start buying in, you buy down, you buy down. And the second you started stair stepping down, 1, and then 2, you should have been buying, right? So the second you started doing this and then this, you should have been buying.
Yeah, and the idea of accumulation distribution, I guess that was a perfect area for accumulation.
Yeah. Well, you had your puke, right? This is what we call a flush. And the second you get a flush and you start to find support, it can go deeper, but you're starting to slow that rundown, right? So don't expect a flush to follow a flush. Never expect that. Like it's very, very unlikely. And a lot of people might be like, well, this right here, no, this isn't a flush. This is a test dump, right? They're seeing what the market can handle. And you can see right here, they test dumped over here too, right? They test dumped over here and market ran it back up. They test dumped over here, market didn't have enough strength to run it back up again, right? And then they just ran it.
Yeah, and I think people were using the theory of it always goes back to the previous cycle's all-time high, and we did that this time.
Well, yeah, we came back and retested beautifully, right?
Yeah.
It's just the reason, and now I want to give context to the 12K thesis because I think a lot of people when it was a possibility versus now it's not a possibility in my opinion. A lot of people were looking for a retest probably somewhere in this liquidity zone specifically, and that makes sense, right? As long as you're above previous liquidity because you had all this touch right here, especially once you broke into this previous wick, you're thinking they're going to push down into like at least these body candles, which never happened either, right? That never happened either. So you're looking at this and kind of dialing in. Now, the place where I knew that makes sense, and this is why I bought in this area around 16.8, is this wick, right? The second you come into this wick, boom, start buying, right? And then if you get down to here, buy again. Get down to here, buy again. Some people are like, I don't have that much. Then break it up. You got $3, break it up. You know, it is what it is at the end of the day. The point being though, is to understand your levels and how you're kind of leveling down. So a flush looks something like this. This is like a test dump into a pump into a flush, right? I'll give you another example of a flush for those of you who aren't aware. So if we look at something like Tesla here, right? Let me go into, let's just go into a single chart. And we go over here. And this is kind of like my time thing. This also helps me keep grounded. So this is basically where I've broken up the bull bear accumulation periods based off of a time span based off of previous cycles. So I never changed it. I just copy, copy, copy. And you can see these 3 cycles are identical. And if you, even if you just played that, you would have been, near bottom, if not at bottom. But here's Tesla. This was a great example. Now, this is one I called beautifully off the 311. And I was like, all right, this is where we dump. And that's basically right around here, right? So I was pointing out to people that we would come all the way into the $100 zone, play it out to a T. Where did I get the $100 zone from? Again, it's just all about liquidity. Did price go there? Yes. Did it go deeper? Yes. But this was the test zone that needed to be retested. And so even though it came back up so quickly, ran, price eventually came back. Now, how did I determine that the market was going to fall over here? Well, I'll be real with you guys. Like Tesla was my indicator. A lot of people were like, oh, this or that or blah blah blah. Tesla told me that Bitcoin was going to fall over. Tesla told me everything was going to fall over. Now, here's the kicker, right? Here's the kicker with Tesla. Tesla to me, it's still in a very, very bearish structure, and this rejection is hard. It's a very harsh rejection. It's just all about now, where do you dial in? Do the bottom buyers capitulate? I don't think that happens. I think what you're doing right now with Tesla is you're retesting liquidity, right? You're retesting your support liquidity right in here, your resistance liquidity right in here, resistance liquidity right in here, and so on and so forth. So Tesla to me is kind of like moving something like this, ideally, is my thoughts. That's what I think is happening at Tesla. This is like a suppression move, more or less, with a big old dip. Because I'm thinking like by the time we get to here on Tesla, this support around 166, I could see a world where you're retapping the low, right? Now, the low on the RSI is kind of like where, ideally you rip. You can see here for Tesla, it's been a pretty good indicator of actual bottoms, right? Right in there, right in there. And ideally, when we get back to it, wherever price is, that would be the bottoming structure for there. Overall, it looks kind of weak. You're sitting below the 50 on the HTF, your high time frames. So, I mean, it can bleed and it can sit sideways for a while, and RSI can cool all the way back down into here. But wherever price is, if your RSI is here, that's a bid, right? You can take it as a long position and probably make a killing move off of that. Or you can take it as a spot bid for long-term bags, whatever you want to do with it. But a lot of my price movement personally, it really plays around 3 things. Now, this is just my trading style specifically, right? Not everybody has to be the same. And I don't ever tell people to get into indicators till you understand what's going on. But mine specifically are RSI, volume, stochastic, and bodies. Stochastic helps me keep grounded with where we are in RSI. So even though I think RSI is relatively low here, stochastics tell me, hey, you're still playing up here, right? Now that doesn't mean it can't continue playing up here, but it's telling me, your more likely trade is that you're going to trade down on strength, and RSI and stochastics going to cool down with it, play the low. And then, wherever price is, and that's your bounce, more or less. And that's how I play these two against each other. If you look here, Stochastic can stay overextended or underextended for long periods of time, even though we bounced there. Stochastic pretty much stayed, floored all the way through here, even though we were up here, right, in price. And then what did we do here? We overextended, right, on just this minor move, then rolled back, and then we came back up, rejected again, overextension. Stochastic still relatively elevated. It's not really cooling down, so I got to kind of watch out for this. But overall, this was kind of like my play, man. This was the play for me that kind of told me, hey, Marcus toast. And I came over to Bitcoin, looked at structure, and I was like, all right, what's structure on Bitcoin look like? And I was just like, okay, we got higher highs, we got lower highs. we're gonna roll over. I'm like, we're gonna go. It's toast. Then you get your test dump, and this is why, like, when people are like, you can't really tell what the top is. Yeah, you can. You get the test dump, you get the roll up, right? Your roll up's based off of a higher low structure. Everybody thinks it's gonna continue up, drop into a support, and then you get your puke, right? Your puke move. And this is where man, I'm just trying to think how to say this, because I feel bad for a lot of people, because this is where most people get smoked. This is where most people exit the market. They usually exit the market somewheres around wherever, the market finds support. And that's the sad part, is this is the trickery that the market can do to people. But on the weekly, right? Again, this is how I played it. I just kind of ran through the time frames. I was like, all right, HTF, what do I have on HTF? What do I have on HTF? And I think I have a video on this too, where I was talking about this right around here. And I was like, if we can get a bull div play, it was either here or here. I was like, if we can get a bull div play, I'll play it. And that's why I played the market at the low. Taz was playing it with me too. Only a few people really wanted to play when that ended up playing out. And the bull div play was more or less down here, right? So you had your rising strength into your drop in a price, play the div, don't fade the div. You then had your bounce, right? You had you slowly started to accumulate to the upside, still following the trend, and then breakout, right? And then you're expecting some kind of like potential breakdown at some point. Nope. We got above the 50, used it as support, ripped off it, came back up, came back to the 50, got back above, used it as support, ripped off it, came back down below the 50, stayed on trend, faked everybody out to think it's over, right? Continued to stay on same trend, faked everybody out to think it's over, and then ripped off it again. And arguably, we could come back again to, roughly around the 50, or we might even come back to somewhere right around here, is my thoughts too, because that's kind of like your breakout position. So that's kind of the other thing I'm looking at right now too. And it's just because there's a lot of confluence. Okay, you're always looking for confluence. Don't always look for the obvious top. Sometimes look where the most activity lies, right? So the most activity lies here, here, and here. Same thing when you're looking at charts, right? Don't always look for the obvious top. Always look for where the most activity lies. So the most activity lies here, roughly right through this range, right in here. Here, 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 here. And same thing on your bottom, right in there. Now, where do we get POCs from? Well, your POCs are your top and your low ranges. You can pick those up. You don't need an indicator to tell you where the POC is. POC is literally just your center of wherever you're ranging, right? And you'll see here, if you just put a simple trend line, you can even do a channel in here. And then from that channel, you can come in and play the highs and lows of that channel. But what you'll see here that's really cool about a POC, which is a point of control, it's kind of where price likes to play the most. It likes to play around that middle range the most, more than it does around the edges, right? It doesn't like the highs and the lows as much as it likes the middle. So you can see here, it was used as support here. So rip here, resistance here, pull back into the range here. Again, you just continue to play the POC. POC flips. Now you're looking for short side. And then over here, get back to support. Again, just coming over and we can pull this over and I'm sure we can find liquidity to the left. And then from there you rip, get back above POC. Okay. Played the long side, get out. Run it short, 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 short. Played to the POC, drop through it, came up, used it as resistance, rolled, and then ripped. And now you're just playing a new liquidity zone. A lot of people want to see this retested. I don't know if this gets retested. This whole liquidity playthrough, and we really don't have to come back and retest that. A lot of this fill-in that happened down here is just because it's more or less rebalancing all of this, right? A lot of people don't even understand that it's rebalancing this right here, because out of the entire chart, this was the least rebalance. This was an overextension. We probably should have never gotten here. In reality, we probably should have stopped there, right? And this is why a lot of people thought it was over. But again, this is your validation for downside, which means exit and wait, consolidation, you can bid, and then rip is confirmation, right? So it's a lot of words. So validation for downside, confirmation for upside. The second you break back into the range, same range as over here, same range is right in here. This is another spot that a lot of people didn't look for confluence. So like when you're looking through these charts, you got to be almost like very ADHD, man. You got to be really particular and look for areas where confluence exists and where price and liquidity can want to exist. So if you look here, you basically come all the way down into here, right? So you had this confluence right in here. And if you look at the rest of this, is just runs, right? Run, 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 run. So if you were just looking for the fill here, which is where you should have been looking to ideally take a position, look at where that landed. Here, we'll actually clear the chart or move everything. Look at where this landed right here. Just this one little liquidity zone. And it's just looking at what happened here, right? Because if you look here, rip, 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 rip. Why did we hesitate here? Why did we hesitate here? Right? Well, why we hesitated there is because of the liquidity over here, right? The market wasn't sure if it wanted to break out. It wanted to leave people behind. So do you think a market ever just goes and just straight to the top? Anybody think that happens that often? More often than not. What's up?
I'm pumping dumps. That's it.
Yeah, pump it down. More often than not, it will play to the high end of the liquidity and start playing up here and act like it's going to resist. And a lot of people get played like that at the highs. They think that it's over. They think that it's done. If we look here at SPY, right, and we were to dial this down and we were to look at it, you can see right here, the same exact stuff that I'm talking about. You come up, you hit, you reject, you hit, and then you break, right? So this is them just basically making people think that there's going to be a rejection, coming back, retapping liquidity, getting the lower low, right? Lower low structure, getting people super bared up, getting them in shorts, and then coming back and taking it all away. And this is this is the same thing Bitcoin did up here at the highs to people, man. Literally just played people. Like if you look here, and I'm not laughing because people got played. I'm laughing because like I see it time and time again, and people just don't get it. They're like, "Oh, I don't know what's going on." It's not. It just expect the unexpected, right? Expect the unexpected. Again, you came up to resistance, and right down in here again, right down in here, right? You have all this confluence. The main confluence I'm looking at specifically is all of this right here. Look at how perfect that touched. Look at how perfect that touched. And then if you would, again, just drag this straight over, you have other confluences.
But you drew that after, right?
No, I had this before.
Yeah, no.
Yeah.
How do you predict that though?
If you look, what do you see here?
Big candle.
What do you see here?
I guess it's. Oh, okay, I see.
And then you got doji, small candle, hammer,
So
hammer.
that.
Looks like it's going to reverse and it breaks out.
So it's building up right there.
It's building liquidity right there. On the lower
And you-
time frames, you can see it, right?
Yeah.
On the higher time frames, it looks like it's just like a rip through. But here you can see them building the liquidity up.
Vertical accumulation.
Vertical accumulation, you hit it on the head, and then coming back and retesting that liquidity. Now, some of you may be like, well, how do you identify that? Yada, yada, yada. You can use, I believe isn't there like an angle in here? I believe
So if the accumulation is vertical, it must take time. It can't happen quickly.
Yeah, it'll never like, well, quickly, it can happen quickly, but it'll end
See
up
how it's
coming
rounding
back
at the
in a big
bottom
way.
lot?
So,
See how it's flat on the top and it's rounding at the bottom, getting in those higher lows?
Yeah.
There's your accumulation, man.
that's your vertical accumulation right there. And that breaks you into the next zone. You come back, you retest that. That's essentially what happened here. This is how a lot of people got played on this move.
So that yeah.
They
Was
were
that after the
looking
Black
for
Rock?
somewhere in here.
That was after the BlackRock. No, that was before.
Yeah. Yeah, all this was before. So
Yeah.
again, now that you see this angle, you can see a lot easier kind of what I'm talking about, because even though this is vertical, does that same thing not look just like something like this? Just upwards.
So that's negative, or the opposite. Yeah.
Yeah, I mean this is just build down to drop to rip. This is just build up to rip to drop. And then to rip again. This
So-
is these are what we call patterns at the end of the day, right? Like this is where most people get faked out in these markets. They get played. Again, here you've got basically what you call a falling wedge, right? Easy to play pattern. You got a rip right here, run, drop, rip, falling wedge, rip, come back down again, same range zone. What you're looking for is you're looking to not ideally violate this high, right? What do? You hold it as support. This is where I told people, I'm like, look, you are holding this as support. I was telling people like for like weeks, you are holding this at support. You need to be buying here. Market then left all of them behind. And then we got the vertical accumulation, which is the same as this or this or this, or it's the same as any accumulation, because what is not accumulation? It's these big candles. These are not accumulation. These are FOMO moves that push the market higher. These are drives. Call them drives, right? This is what drives the market to the upside. So looking at that from an important standpoint, you get your drive, vertical accumulation, drive, sideways consolidation, pullback, retest of liquidity, and then rip. That's basically it at the end of the day. And then you get the high time frame wick here. Now, how did you know that, that this doesn't signal it's over? Look at all the buy pressure at your lows here. You have a ton of buy pressure. How do you know you have a ton of buy pressure? You're not only seeing volume pick up here, right? You're seeing massive wicks on the bottom side, right? Big wick, big wick, big wick. And then what happens? The first time somebody comes in and says, you know what? I'm going to take a little bit of profit here, guys. This looks like a good spot to take some profit. Everybody's like crying on the timeline, right? They're just crying about it. And then price does what? You get your drop. Again, this is a flush. And now you're consolidating back down. See that? That's consolidation. And then you rip back off of it, right? And now you'll probably consolidate again. Either you're going to go this way, even higher, which is going to be bad for shorts, or you're going to come back, take out shorts, and then run long. So it'll be one of those two type of plays. But I always keep all plays in my head, right? Like I'm always like, okay, if this happens, then I'll play it this way. If this happens, I'll play it that way. But guess what? I bought here. Why? Because this is where the liquidity lied. This is where everything was at, guys. Like I can't make it any simpler. That's good.
Yep. Just that maneuver that you were explaining then. The accumulation, well, just that whole structure, and then all of a sudden someone big comes in and just basically dumps your bags for you. That's probably a pretty important move to learn for shitcoins, right there.
Yeah. Yeah, this sweep happens a lot in shitcoins.
And they're so
This,
predictable because they're just literally playing the move that rolls everyone.
yeah. They get everybody bagged in. They tell everybody, hey guys, it's time to buy. You're already broken out. Everybody buys in. Consolidation. This is where they're selling to you, distributing, and then rip. And then they really distribute hard here. And that's where it comes down big time, and then comes down more and more and more. People give up, and then it comes back to life later.
Yeah, that lower part below that trend line, that's where all the little fish start giving up, get washed.
Yep, exactly.
So in comparison to the last bull run, are we ahead?
What do you mean by ahead?
Like, we're 4 years ago, it was 2020 January, but this year, are we ahead? In price?
No, I mean we're right where we should be.
Yeah,
we're pretty much right where we should be. And ideally, if people just take it from that perspective and understand, okay, we're where we should be, where are we going? It's not a hard conversation. It's really not a hard conversation. So we're here, which is basically here. So I mean, you've got this much more to go. Like the market's gonna absolutely rip people's faces off to the upside. I can't make it any simpler for people. Like I try and it sounds like I'm just some kind of massive bull. For those of you who know me, I was not a bull in 2022. I told people to sell everything. And they were going to get annihilated in 2020. At the end of 2021, going into 2022, 2022 came, the market absolutely tore everybody a new one. Like just came in and wrecked everybody. And I just call it like I see it at the end of the day. That's all it is. Now you can see here on the lower time frame, again, we talked about this being a falling wedge, but if you were to go to the monthly, what are we seeing here? Well, again, look at this wick, right? If you were to just use this wick as your support, ideally you came back down, touched it. That's your previous resistance, right? And then you came back down and touched it again. I mean, on that second touch, you should have been ready to go. You should have been loaded before this candle even opened. And if you wanted extra confirmation, then wait till the candle opens, right? But after that, you got left in the dust. The market left you behind. There's only two moves here on the HTF, and this is what a lot of people are failing to get here, right? If we look at Bitcoin as a whole, and we were to say this market's gonna shit the bed at some point, blah blah blah. I'll give you the simplest landscape high time frame move that I can think of, and that's just literally take these highs right here and just draw a trend line. How much more do we have to go to hit that trend?
halfway.
That's still a lot of room. Like people are getting bearish here. That's a lot of room, right? And granted, we could very easily roll somewhere like right here, right? Anytime you get close to the 70, really, you could dial out ideally, right? You could dial out ideally. But if you dialed out here on the 70 here, you dialed out probably somewhere around here. And that's what everybody's doing right now.
So you think the all-time high will be broken in 2024 then?
Possibly, we'll see. I mean, I think at the end of the day, what I think as far as time span doesn't matter. What matters is that we know where price is going, and we should pay attention to that specifically, right?
Yeah.
Can I ask a question there, Will, just on your moving averages?
Yeah.
So obviously you're watching the fast moving average then, and you're basically putting out each trend. Does it matter if you're watching the high or the low? Is it just the same deal with the slower moving average? Like they should, like when they both line up to that trend, is that a pretty good sign? Or do you only ever watch the high moving average or fast moving? Sorry.
You're talking about the MAs?
Yeah, the EMA. Sorry. Yeah.
Uh, I mean, I use EMAs, but I don't use EMAs. Like, I feel like a lot of people use them as a crutch, to be honest with you, man. Like,
Yeah. Yeah.
my personal trading style, like, I don't feel the need for them. Um,
Yeah.
for me, it's all about moment. So I'm more just so people know, I'm more of a momentum trader, right? So like, I'm trading momentum of markets, not necessarily like bull market support bands or anything like that. So like I'm trading like, is the momentum in my favor? Is it not my favor? And that's the way that's always
Yeah.
worked out for me. And
Yeah,
so
and you can just see that within the candles sitting right there
yep, you can see it
without
within the
actually looking
candles.
below. You can see it there, and also your point of controls. Well, they're easy to see. They're dense lines. Yeah,
Yeah, you got your
makes sense. Yeah.
POCs, you got your RSI, you got your volume, right? Like all that stuff has to line up for everything to play. Vol ideally, another thing too that kind of works in your favor is like when you're in a downside market on HTF, just kind of like follow your trend and look at your vol, right? If your vol is dying and price is puking like this, you're done. But if your vol is rising and you're getting green candles, in between, you're good. You're good. These are areas where you need to really kind of pay attention to
Well,
price.
that's actually leading the indicator, isn't it?
Yeah, yeah, and I think like so many people they again they look at these low time frames because they want to move fast, right? But moving fast isn't always best. Like you can actually, as much as everybody wants to be an expert trader, you can actually make more money just buying and holding and then selling at a certain point. Because most people don't have the skill set to actively trade these markets. They don't, or time, right? Or time. And so it's better to use this as a way to find better entries as opposed to a way to leverage your way up through the market. Can you make money in leverage? Sure. But like if you really don't have a clue on what you're doing, or this is your first time like looking at a chart, you're probably going to get taken to the cleaners multiple times before you learn your lesson on leverage.
To be honest,
So
man, I'm overlooking it like hourly charts. You're just like a squirrel on the freeway. It's just chop, chop, chop. It's just too hard to read. You zoom out, and there's the big picture right there.
yeah, exactly. That's why you always want to be out on the timeline. You want to be zoomed out really far and just kind of get an idea of where you exist and where you're at. And then once you get that idea, right? Once you get that idea, then you can zoom in and be like, all right, well, if I'm expecting a bounce here, what does my daily look like? Where's my resistance at on my daily? Okay, what does my 8 hour look like? Okay, where's my resistance on my 8 hour? Where does my 4 hour look like? Where's my resistance on my 4 hour? And if you look at it from that perspective, you can trade these markets on these lower time frames, but you can't go to the 4 hour and just because the 4 hour looks super bearish, say, okay, well, this market's toast. We're gonna come all the way back down here. No, 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 no. Dial back up. And if you can see it on the daily, weekly, monthly, sure, you're probably right. You probably won't see this on the monthly, actually, probably more like daily, weekly. But if you can see some kind of high time frame resistance, then yeah, you're probably right. Then that 4 hour bearish play may actually play out. But you need longer times at certain areas. Otherwise, you're just going to get chopped. Like, think about if you were trading here. If you were trading right here, I don't care if you were long. I don't care if you were short. If you didn't close those positions, you got wrecked on both sides. This market absolutely took you to the cleaner on both sides of the trade here. And this is why you have to be careful with leverage and know where you are in the market, because if you're playing longs or shorts here, this is where you get cleaned up. This is where they come in and clean you up, right? They build, they build, they build. Again, higher lows structures. They just broke a higher high, and they got another higher high. They make you think their price is going to swing high. They take it all away, right? But they chop you on both sides because they don't let shorts get away with it either. Look right here. They killed all the longs, all the longs. And then what did they do before they dropped price? They took out all the shorts, all of them, right? They ran it straight up and then straight down and then come over here. Same thing, popped it up and then ran straight down. And then from here, popped it up, came straight down. And again, you got so many drives to the downside that ideally this thing has to reverse. And this is what a lot of people were not acknowledging. They're like, oh, it's just going to keep puking. It's going to keep puking. This isn't 2022 anymore, guys. It's not. Like, we need to get out of that mindset of how we traded in 2022. I dropped it real fast. There's just so many traders are trapped in this PTSD, man. They need to go see a counselor or something. But like, just stop looking at the instant like we're trading in 2022. We're not. So you have your accumulation high. You're gonna run that, and you're gonna bounce. It's just what it is.
So you think many people haven't flipped yet? They're still in the bearish phase.
Even if they're in the bullish phase, they're still trading like they're in the bearish phase. They're
Yeah.
not trading like they're in a bull market, right? And when I say bull market, we're not in the raging portion of the bull market yet. We're just in the first inning, right?
We just
This is the
flipped.
first move.
Yeah.
We're flipped and it's official now. A lot of people have to look at this and understand it from that perspective. And so you need to be trading as if you're trading always long, which means that anytime you come into support, you need to be bidding those, right? Anytime you come into the support, you should be long in those, not anytime you break out. Counseling has worked. Yeah. No, I mean, I'm real, like, some people genuinely do, man. There's some people literally losing their mind on the timeline, but yeah. So again, you want to play the long side of the supports and you want to play the short side of the resistances, but just don't play them too heavy. That's all it is. I typically tell people, I'm like, look, if you haven't ever traded before, always, if you're looking at leverage as something you want to get into, only play the side of the market that you're on. So if you're on the bull side, only play upside. If you're on the bear side, then only play downside. Like, don't play both sides unless you're a really skilled trader. Because if you're playing bear side in a bull market, you will get trapped so many times over and over and over again. And vice versa, right? Vice versa. I'm surprised a lot of people didn't lose everything they had through 2022, man. There are just so many people calling every bounce as what that was going to reverse the market. It just never happened. But yeah, again, it's about structure, candlesticks, all that stuff like that. Again, falling wedge, breakout, drop down. Again, this one isn't really a falling wedge. This is kind of like a dying pattern. But this is where price is kind of like going like this and then just drops, right? And then finds, again, you're looking at confluence. And if you're continuing to hold that, and again, here's another example of what we just talked about right here with the vertical accumulation. So if we look here, let me go into that one. I think it's let's see, right in here. We had the same vertical accumulation kind of occur right in here, right? And nobody wanted to acknowledge it again. So there's one, there's two, and now we're kind of coming back, retesting liquidity and looking to break out, ideally. So yeah, I mean, that's good.
No, I was going to ask something else. The all-time highs, are you going to be able to call those for each cycle, or is it sometimes hard to tell?
I mean, it depends on the pattern. I'll just put it that way. So like, if
Because
you
you
get a
said you were
blow
able
top,
to call the last bull run's top.
well, that was because it was a double top. Double tops are very easy to kind of see through, more or less.
And we probably won't have that this cycle.
I mean, again, if we look at the RSI and we utilize that as we discussed, and we just say, okay, ideally, somewhere's around the RSI. And really it looks like this was a little more flat, whereas this is a little more downtrending.
Yeah.
Right. And I mean, if we want to be super bearish, we could even like some people like want to do that, but then you're actually using it as support. So that doesn't really work in your favor. But you know, if you want to play the lighter half, then play the downtrend versus the flat trend. You can see it also right in here as far as strength goes. You're getting kind of this falling channel, and falling channels are actually bullish. So maybe long term, this ends up playing out to be something much cooler than a lot of people anticipate. But ultimately, you could just play the ranges more or less.
And what do you think about the? Oh, sorry.
I think overall, like if we get into another thing here, we'll discuss this too, and don't do like the whole Fibonacci's are be all say all. I feel like a lot of people get into that mindset where they're like, okay, Fibonacci is the way. It's well, the Fibonacci says that's going to happen. No, that's not how things work. Fibonacci's were actually created for fallback or a downside, and not actually for upside. But you can use them for upside.
No,
But
lunar cycles are the truth, man.
lunar lunar cycles. But I would say if you're looking at this and you're like, okay, what's your upside potential? Let's see, come in here. I'm gonna just go settings, go reverse. Okay. And we're just looking at it from where it's at right now. I mean, you're sitting right in your golden pocket. Ideally, $164,000 Bitcoin is what we can go off if we're just going off the Fibonacci. Again, this is why I think like you'll be over 100, but a lot of people will be calling for like 250,000. And I don't think you'll even get close to that. We'll see how this plays out, but like this is another way you can look at these two. I did want to get into total a little bit. I know we didn't really discuss that. So like I'm just using different prices as kind of like indicators. There's a lot of stuff going on here right now. So same thing here as what we discussed with Bitcoin, where I kind of discussed your topping, right? And oh look, I already had it set up. Right there's the rejection where I was looking for. So I was looking for something similar to like this as kind of like a rejection. And this is probably what a lot of people are looking at and like, okay, this is where it's all gonna end here, guys. When in reality, this could play to the downside a little bit and then bounce right back out. But this tends to be your bottom range right in here and right in here, right? This whole fall off and this whole fall off right here tends to be your bottom range on total. This is all of crypto combined, yada yada. So you can see it pretty much comes right into the same range on both cycles, while the highs get lower, right? Or at least the strength. The strength reduces, holders are pretty much holding. That's why price is going higher and not taking profit and so on and so forth. So this is why a lot of people look at this market as like a boom bust thesis. But one thing I wanted to talk about was like this little kind of like breakdown. So this was kind of like your rollover top right here. And you can see it kind of like right in here where you just hold in the range, but you're continually get crushed against it, right? That tells you you're going to puke at some point, and that's what ends up happening right in here. You end up puking to the downside. You then roll out of that, come back up, find higher high support, play into it, and break out. Ignore the wick. The wick is a pandemic that doesn't happen every single cycle. So I don't know why people bid Black Swan events. So yeah, again, I would stay more towards the price range. We saw a very, very similar move here on total. Again, this is not Bitcoin. This is all of crypto. This cycle, right? And if we look, and you can see here too, like this thing kind of like dies down on volume, picks up a little bit, picks up a little bit, then really picks up. We haven't really picked up at all. You drop down, you hit your low right here, came up, higher low, break out off the higher low. Very, very much the same, right? Again, higher low, break out off the higher low, and you're probably somewhere is like in here, ideally, or somewhere is like up here, actually more up here. Because if you look here, I took the high to the high, and then kind of crossed it wherever it crossed over here. So again, I took the high to the high, and then it crossed somewheres over here. So this is your squeeze here was much less than your squeeze here as far as your downside here. And this is, again, this is why you want to look at patterns and be like, all right, what's the pattern that makes the most sense here and what's actually going on? And then not only does it match here, these same lows that we're discussing here, I'm just showing you guys kind of like how I think. This is how Will's brain works. You got the same low here, same low here. You got the same low here. Again, all through here, really, all through here. And your same low here, right? And then you get your sweep up, your sweep down, and then your breakout. Again, sweep up, sweep down, and you're kind of playing the high here, but I think you're going to break out at some point, right? It could just be that rather than come back and use this as support, we're bouncing down and then we're going to come off and then we're going to break out, something like that. So all patterns don't have to match necessarily, but you want to find similarities, right? Similarities kind of give you that idea of like positioning and where you are in the chart. And then time frames on top of similarities will help you kind of identify where you are specifically, right? Again, so I'd say somewhere's like in here would be kind of where we're at here. And I think in hindsight, we'll see this in the future. And if we are there, then I better definitely have you guys spamming my timeline. Just saying. But yeah, so overall, if we are here, ideally, we are looking for a breakout at some point, right? Whether that be next month, a couple months after, whatever. But crypto is growing. Crypto's growing. We can see that. Bottom's in. It's very obvious. Bottom, bottom, higher low, breakout, breakout. Very similar type of moves. Just again, people are so hyper focused on some kind of black swan event happening that they can't go outside and look and see that the light is actually coming from the sun, and it's not just something that's just exists. There's so much misconception in this space. Again, I think due to lack of understanding of charts and what's actually going on, that people can't see the patterns that are actually accruing and creating the momentum for everything. So again, this is the hope it holds range, right? This is the massive discount range. This was the hope it holds range. This is the massive discount range. So I pretty much lined all this out. I was gonna put this out there a while ago, but I haven't really put it out there. And you can see here, this is when we were at the lows, guys. Like when we were trading, I think ideally somewhere's around here or something like that. I put this out and I said, accumulating in Discord, accumulating both of these ranges, and I said this range and this range. And these are the two ranges where I, ideally played in. And that was your basically your low end 1670K Bitcoin and your 25K Bitcoin. These are where I bought the heaviest into the market. A lot of people, again, they continue to look for pullbacks that probably won't play. And ideally, I urge people to just not get caught up in emotions with bullshit with people. Like everything to me is pointing, as far as pattern wise. Again, if we talk pattern, your patterns are playing as they should, right? And these are what you're looking for. You're looking for pattern and you're looking for things that kind of more or less match. So you dial from your high time frames to your low time frames. You look at your candles. Your candles will tell you everything in the chart. Again, you got the big wick down here telling you there's a lot of interest in price here. That's what this means. A lot of price interest. Just like there was a lot of price interest up here. It's just that these two are the opposite, right? So here it was interest to sell, and here it was interest to buy. And so you've got a calamity at this point. It's like, okay, which direction do we go? Well, we can sit here and do this between these two positions until somebody decides to make a move. And if bears can't pressure downside within a allotted period of time, which means relatively soon, they need to do it probably somewhere in here around January, March. Ideally, we'll trade sideways and then break out again to the upside. Fill this wick, use it as support, and then ideally move off of that to the highs. So these are kind of like, you should always entertain both directions and have a plan when doing so. What does that mean? It means that if price breaks the range, and let's say Bitcoin comes down and breaks into here, I would expect Bitcoin's going to probably bleed down to here, right? But you can't expect that until you violate the low, until you violate this accumulation uptrend. So you need to violate that before you can even entertain more downside, which means you need to get into like 37.6, 30, 37, possibly 36, and you're probably gonna roll, right? You're probably gonna roll, come down, hit these 33, hit previous liquidity highs before breaking out. And if not, you're going to trade up here in these upper ranges and you're going to break to the upside. So it's just being able to identify everything that's going on in the chart. Never come to the chart. I'll tell you guys this, look, the best way to get wrecked, position wise, the best way to get wrecked is come in with a bias, right? Come in and be cocky, come in with a bias, come in and think you know more than you actually do. Trying to make a name for yourself, that can be another good way to get wrecked. So you got to be really careful doing those things. Like honestly, like what I would recommend to a lot of people is probably trade privately, right? Trade privately, get some confidence in your plays, let some plays play out. And then once you get that confidence, then you can take and you can throw out some charts and throw out some ideas here and there. But throwing them out there at the beginning and somebody comes in and talks shit to you one time, it may deter you from wanting to continue to pay attention to markets in this way. And that's usually not the best thing for a lot of people. A lot of people should be looking to ideally improve themselves. And if we were to look at this from this perspective here too, 6. All right. Here's another way to look at this, and this is another way I looked at this also. And again, so we looked at the other way where I showed you guys kind of like the high time frame crossing, blah blah blah. Well, let's look at it from we'll use the weekly daily crossing, and we'll discuss that one because that's another way you can look at it too, about the channel here. So basically, if we come across here and we come across there, this is your body candles that I was talking about earlier, right? Ignoring the wicks, looking at the body, looking at where price was playing within a particular range. So played the mid-range, played the upside, again, mid-range resistance, ran through, dropped through, right? This right here is going to be this right here, but upside down, in my perspective, right? So what I would think is that we'll probably do something more like this. And we're already starting to see it. So we'll play this right here from the high. And then we'll flip that from the low. And then we'll just, where is that at? Flipped. There we go. And then from here, it's going to be something kind of like that. So we've already touched down here, ideally. So this is my thoughts where a lot of people are going to get played here. Again, if you guys saw my previous chart, it showed exactly this, right? It showed the sweep into the rip, into the sweep, into the rip. And if you look, why would that play? Well, that also plays into my trend, right? Plays into my trend perfectly. And nobody gets lower entries, period. I'm sorry, I have to be vicious about that. But
So 100K is your prediction?
I keep telling people. I mean, the 100K is kind of irrelevant at the end of the day. The point being is once you get above all time high, start looking
It
for
could go. It could
resistance.
go anywhere from there.
Yeah.
What you're looking at there, Will, if you don't sorry,
No, go ahead.
what we're looking at there is also a W pattern playing out, a big one.
Yep.
You've got your higher low, and you've got your breakout, okay, on the fractal side of it, and then you've got your shakeout, which is your sweep, which you were talking about, and then your breakout.
Exactly. That's a big breakout too, right? That's a big breakout. A lot of people, I couldn't even imagine how many people are going to cut off guard on this. Like, and this is what I meant when I posted on Twitter, and I was like, oh, a lot of you are going to get caught off guard by the swing loan that's about to happen in your live in your face. And primarily, I was talking about just this, right? Because this, if you shorted here, you're getting liquidated. I don't care what your leverage is, you're getting liquidated by the time price gets up to here. And then comes back down, liquidates all the people thinking that they can go long here, and then rips against them. Again, just it's not a hard process. Just literally follow your trend. That's it. If your trend is up, follow the trend. But I wouldn't be waiting for here to buy when I could have ideally bought here, right? Which I did. And this is what I'm trying to teach you guys is like ignore all the because like yes, you could have dropped it here. You could have dropped it there. How much more would you have gotten? 9% more. How life-changing is this compared to this? Right. And that's the way you have to view these markets. You guys got to get out of that mindset of like, I can get a little bit more. I can get a little bit more. I can get a little bit more. No, a little bit more is not, it's not a reality at this point. Your little bit mores were here. When structure was still being created. Structure is now on a path for upside. And again, this is just simply following your trends. Over here, it was, again, it was pretty simple. You had your easy bear is playing, right? And then not only did you have your bear is playing, you had your fake outs, right? You had your support here, and you had all this liquidity down here that needed to be tapped. And so it's like, okay, we're going to go below 30, and everybody thinks we're not going below 30 because there's support there. That's great, because if everybody thinks we're not going below 30, we are going below 30. And we're going to ideally touch at least the high here. And if we go really deep, and I was watching this area too, kind of using it as like a place off spot, but like it went a little bit deeper than I think than that wick did. And then I was like, if we really break structure down here, then we can come into something like support here or even up to here. But do you see how I'm lining the chart? Am I saying definitively we're going from here to here? Or what am I doing? Anybody?
You're following the trend.
Yeah, I'm lining things out. I'm looking for supports. Again, resistance, flip supports, right? Right here, resistance, flips supports, right? Resistance, flips supports. Like these are what I'm looking at. Everybody wanted to see this retest because this liquidity got away. It didn't really get away. Why? Because if you look to the left over here, that liquidity was already filled over here. What liquidity did get away? All of this liquidity. What liquidity got filled? All of this liquidity got filled. There's no coming back. I can't make it any more evident for people. Like, if you're looking for a significant downside, like your liquidity fills. These are important to always pay attention to because when the chart comes back, and we'll call it just a simple rebalance of price, the rebalance only happens once. It can happen twice. The likeliness is very unlikely. It has happened to SPY in the past over like a 10-year period, but Bitcoin hasn't got that much time under its belt. And that happened right over here. W formation pattern, again, as we discussed earlier. What happens in the stock market? Goes absolutely ballistic, right? Right here, we got stock market V-shaped recovery. Ideally, I think this can turn into some kind of weird, like higher W. The question is, does it end up much higher, or does it end up kind of playing the high here and then rolling back and taking off? And again, this, if you look at this time period, like this is not, it's not this year. It's not next year. You know, it's ideally, you know, maybe into 2025, 2026, 2027, somewhere's in there. Like, if we're gonna see downside again, that's where I think it'll occur. That's why I told people that we're talking about macro bullshit. Like, you know, like that none of that shit mattered. Like, it doesn't matter. Liquidity flows, everything's in. Like, macro did not matter. Doesn't matter how broke people are. Doesn't matter how much people are suffering. And I'm not saying that like I don't care about people. I'm telling you, like, the market does not care about people. That's what doesn't care about people. And so, like, no matter what conditions you're in, or you may be feeling personally, that doesn't mean that the market is in that position. And so, if you think the market is going to give an opportunity, you have to take that opportunity. If you don't take that opportunity, even though it may suck, maybe you have to suffer a little bit through that. Like, you have less things, or you know, whatever it is you have to do. But like, you got to bid these positions if you want to beat inflation. Go ahead, Tats.
Yeah, so because the stock market has actually reached the previous high, shot up. Remember quite a while ago we were sort of talking about it falling just short, so then the retest would be lower, like we would expect it, like it to be form a lower low on this next retest. But because it's hit that mark, is that why you're now looking at sort of it not dipping as low in the next cycle? I know it's only speculation, but just that W.
It could form higher low. It could form lower low. Historically, it's never formed a higher low, right? But it doesn't mean that history can often rhyme. It'll rhyme, but it's never perfectly matching, right? So we could end up ideally up here ending up with a higher low, whereas over here we ended up with a lower low. Previous ones we ended up with lower lows, and so on and so forth. But if you look here, right, this one did end up being a higher low here.
It'd really shake a lot of people out, though, wouldn't it? They wouldn't see it coming, I guess.
Yeah, because they would probably anticipate a lower low, and then they wouldn't be bidding the lows of the market. And again, this is what I mean by bear market PTSD. There's just so many people that are so set. They changed their trading style to adapt to the market, and they're refusing to change it back.
Yeah, right? They'd be too scared to recognize the liquidity inflows and just miss out.
Exactly. They'll completely ignore the inflows, and they'll look at all the data macro bearish theses and try and play off of those. That's more or less what will happen to a lot of people.
And I guess big money whether we've got money or not. So
exactly,
yeah. Matter what's going on.
I mean, look at all the stock buybacks you saw this year. Like, if people weren't paying attention to that, I don't know what to tell them. Like, these companies were buying their bottoms. They were literally buying their bottoms. They haven't bought a single stock since.
They've got insane budgets to buy back, and they're buying back at such a huge rate. It's crazy.
Yeah. Again, it's just more signals to pay attention to, not trade off of, but pay attention to and understand. Okay, these guys are probably buying their bottoms. So now I need to go to the chart and look at the chart and see what the chart's telling me. Tell me if it is. But ideally, again, these are coming back to patterns, W-shaped pattern, and so on and so forth. not, I don't know many people that identify these kind of patterns, guys. Like I see very few and far people in between who are able to identify patterns in the charts and pay attention. But I'll tell you, if you can master patterns, you will do very well, very well. Don't go to your H4s or your 4 hours and be like, oh, look, we got a W. Yeah, you could probably scout that out, but like you want the higher time frame patterns. That's what's going to give you the true trend of the market. And then if I think that this is the play, then ideally I'm always looking for longs, right? I'm looking for opportunity for longs. I'm not looking to long randomly everywhere I can. I'm looking for certain supports to be touched before I take long entries, and then I'm looking to take long entries and looking for certain resistances to be broken through and or resisted, and then I'll exit those entries and look for another position again. You can go lower in the daily if you want. I mean, I'm not telling people don't do that. I'm just telling you, like, always look at your high, identify your trend, and then you can dial down into smaller time frames. If your trend is up, use that as part of your thought process when you're looking to get into the 4 hour and you think the 4 hour is going to fall over, and it may fall over. You may be right, but ultimately understand that, hey, I know that the market's going to fall here on the 4 hour. I'm going to take the short, but I'm getting out at the first support. Like, I'm not going to hold this looking for the next support or the next support because my trend is up. Right. So that's what I mean by that. It's like, it's not telling you can't play downside. It's telling you to play it to a limited degree. Like, take everything level by level when you're playing the opposite of the trend. Always play, if you're playing the trend itself, and let's say Bitcoin does exactly what I show here with a fractal, rolls up, plays up here, comes back, retouches liquidity right here. You could bid long here. You could bid long here. And then you could take that all the way up through the top, right? Ideally. It'll be crazy if this ends up playing out like this. But this was kind of my thought, is that they were going to roll this back out, roll high, play a lot of people in the short positions, probably rip it higher. Everybody's gonna get super bullish if price gets up to here, like ridiculously bullish. And then they'll get up into here, give you the higher high, make you think it's coming for the all-time high. And in reality, it's gonna come back really hard. I mean, look at this correction here. If we were to go from there to there, you're looking at a 26% drop. Everybody's gonna be saying, oh, it's gonna retag here. That's what everybody's gonna be saying. They're gonna be like, oh, it's coming back to here. Like, I feel like people, like, some of these guys, I know they've been through a couple cycles, and they're acting like it's their first cycle.
But long term, that's just sideways.
Yeah, it's not even
I mean,
anything to like cry about.
You,
It's like just
you've
buy
been
and
calling
hold.
sideways for a long time now.
Yeah, it's the same thing as right here on the monthly. Same thing. Look, high time frame distribution that turns into accumulation. High time frame distribution that turns into accumulation. Like, it's all it is, guys. Like, in the second you break all time high, this thing's gonna rip. But ultimately, like, we're playing here, and these guys are acting like they'd never seen this happen before. They're legitimately acting like they'd never seen it. Like, oh, this is the top, guys. This is the top. That's all I see on Twitter. But I'm not gonna rant on that. But again, it's about looking at previous or past behaviors from market participants, which you can see in the candles, and then identifying current behavior against the candlesticks and being like, okay, current behavior is matching past behavior, even though the patterns are different, right? Your pattern here is dropping and then fall. Your pattern here is a nice round top into support and then breakout, and probably another nice round top into support and then breakout. That's what your pattern is probably going to look like here, ideally. Do we have another question? So, do people kind of know what the difference is between the candlestick, the wicks, and the bodies, right? So, I'll give you kind of the 101 on candlesticks real quick. So we'll discuss this. So we have candlestick body, right? Which is your open to your close, right? And then you have your wick, which is your noise in the market. So always understand that your noise is not your price. Your price is your open to your close. Your open to your close is your body. Same thing in stocks. It's open, close body, and then noise is wick. Wick is telling you, okay, where did they try to force price, but where did price close? That's what it is, right? Where did they try to force price, but where did price close? Now, again, when it's downside, right? When it's downside here to here, you are looking at open being the high and close being the low. When it's upside, you're looking at open being the low and close being the high. And if ever your next candle, high time frame, engulfs your previous candle, we can then expect continuation. And then again, next candle engulfs previous move, we can then expect continuation. But what you're seeing here, high time frame, is also what we would call resistance, right? You're seeing some resistance, some support, but you can see ultimately we had more here than what we had here. And so this move actually engulfed this drop. And because this move engulfed this drop, you then had the sideways, the drop, and to the pump, and to your breakout, right? Then you had your breakout. You get your doji. A doji is an indecisive candle. For those of you who don't know, you can look up doji, D-O-J-I. And then what do you get from a doji? You get it from a doji, you get a pullback. And then you get a big wick here, even though you got a sell off right here in a close, right? That tells you that buyers are stronger than sellers, even though they got this body candle close, because buyers were able to force price back up above resistance / support. And now what do we see? We see a retest finally of the same support / resistance and a breakout into the next area. Now, one thing you'll notice every time that where they trick people is when a candlestick closes, it usually will probably open, pump, and then dump into the range before coming back to the open and then running. This is how a lot of people get played on these moves. They get played on these moves because they see the dump and they think that it's just going to start pushing back down. But in reality, this is how the wick is formed, right? You'll never really see a candlestick without a body. I mean, with a body without a wick. If you do, expect that entire candlestick to be filled. If you ever see a candlestick with a body without a wick, it'll probably get filled, which means price will probably come back all the way back down to the low before it ends up breaking back out. Now, here we had a lot of buys, but we see we kind of struggled into resistance again, right? Resistance being the same wick you saw here, right? We kind of struggled right here. And so price fell back below, faked a lot of people out, made them think that this thing was going to reject and come back down. But in reality, it came back up to the open and pumped really hard to the upside. Now, where would you have saw that? Again, if you were to come in here and you were to look at it from that perspective, price came back down,
$3 per DM.
rolled back up above support, and then broke out, right? Subsequently. And then you had all this room to the next move. So you basically ran. Now, what are you seeing up here? Wick, 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 wick. So you're starting to see more or less a slowdown because these wicks are much bigger than all the previous run, right? You had all this previous run, and now we're getting really big wicks up here. That means you're starting to slow. When you start to see heavy selling, and what this is telling you is that you can have big wicks to the upside and still continue the direction that you're moving. This is what I'm trying to tell people. Like they're looking at this like, okay, there's a big wick here. I need to be out of this market. No, this thing can wick here, come back down, and roll right back out again. Like it has, there's no reason that I can't do that. And then again, so here, big wicks, you can obviously see the resistance. You come back down, you get heavy buys, heavy buys, heavy buys, heavy buys. You get a heavy sell-off, a heavy buy, you get a doji into a rip, right? So this just means they slowed the move and then rolled it back up. And then you get the open above support, boom, breakout, right? Breakout to the upper range. Test, roll down, test, roll down, lower high, get out. This is where I told people it's gonna roll, and it's gonna roll hard. And this thing literally just went straight down. So we then dropped down into here. Price then came up. I wasn't a believer at first, right? And then price came up again. And I was like, okay, we got to play this. Once you got back above this mid range, you're coming up. And then you broke out and closed here. Oh, you're going to come up big time. And then what did it do? They rolled it up here. You kind of question if they're going to roll it from here. But in reality, they reverse it back up, right? And they push higher. And this push higher then gives you a higher high. This is where you trap everybody, right? You trap everybody on the higher high, but nobody pays attention to this. Your lesson strength. Not only your lesson strength, wick, 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 wick. You're struggling up here. You are struggling. Just like you struggled over here, you're struggling up here to go higher. Market then drops, big buy-in. So this big buy-in, the only thing it told you, the only thing this buy-in told you is we were going to consolidate, right? There was a big buyer here. It's a big buyer here. So you're going to do this before you drop and fill the wick. Fill the wick. And then what do? You drop again, come back up, retest where you dropped, come back down, retest where you dropped, come back up, retest. You've retested 1, 2, 3 times. You're going to fail. You're going to fail. Price then comes down. Again, structurally, holding the range because there's a lot of confluence here, right? So they roll into the drop right there. Again, another big buy up. So you know this is going to take some time, but it's going to play. They get the big bounce, big rejection, hammerhead, drop. Now you're getting consolidation. Now you're getting consolidation. How do you know you're getting consolidation? Well, it takes time. You let it play, up, down, drop, come back into the same range, down, drop, come back into the same range. You've done this now multiple weeks in a row, multiple months. You've been playing the same range. Expect some kind of puke coming, puke, boom, drop. No volume dead. No volume dead. Can somebody tell me what no volume dead means for a market? When you're on the lows,
It's a good time to grab a bag. She's not going to go any lower.
It's not going to go any lower. That's the part that people really can't understand. They just don't get it. What do you mean it can't go any lower? Sellers are exhausted. They're completely exhausted. There's nothing left to sell. There's nobody willing to buy.
Could take months and months, but she's going to happen.
Eventually, this thing's going to reverse. Yes, it could take months before you end up coming out of this, but this is your best opportunity to buy because there's no trading, absolutely zero. Everybody gave up on it. They capitulated. They sold everything they have. Everybody's out. So what does a market maker do? Well, they have to move in the direction of interest. So if there's no more interest to sell, what interest is there in the market? There would only be interest to buy higher. So what do? Create higher prices. People don't believe it. They sell into the range. Boom. Create higher prices. People continue to buy. Create higher prices. Buy. They sell the lows again. Again, look. Say you see this time and time again. Look. Dead volume. Look at these candles. There's nothing there. Dead volume, pump. Look. Dead volume, pump. Dead volume, pump. Dead volume, drop. Dead volume, pump. Over here. Dead volume, vertical accumulation. And then pump. Dead volume, we're going to pop again. It's going to happen. Like, again, just look at what you've got going on. The chart can tell you the volume. The candles can tell you the volume. The vol is here, yes, but the candlesticks can tell you the volume too. They can tell you, hey, nobody's trading here. Nobody's trading here. So nobody's trading, nobody's selling, nobody's buying. If you can't create sellers, the only thing you can do with an asset, because if nobody's going to buy your asset, the only thing you can do is buy the asset to push it higher. Fake or not, manipulation or not, that's the play. And believe me, when this thing first bounced, I took it as a dead cat bounce at first, expected around a drop into this range, and I said, if it bounces off here, it's not a dead cat bounce. Bounce right off it. If it would have broke here, it would have been a dead cat bounce, because it would have came back down to the low and then eventually probably violated lower. But it didn't happen. It found support at the mid-range, the POC, right? Your POC. Bounce, drop, run, drop, run. Again, easy support, run, easy support. But the biggest thing is always identifying support and resistance, right? HTF to LTF. Weekly has been my best friend. Easiest play here. Again, resistance, resistance, support, support. Like it's the process is much easier than most people think it is, right? It's much easier than most people think it is. So you flipped your mid-range, you played the low. Hold on a second. You played your low, then you rolled your high, then you bounced, right? And ultimately, this is where you are. And now, again, arguably, you're probably going to do the same thing up here. You're more or less playing the high end range, right? Just like right here. And you're going to run real hard to the upside. Probably fill this. Probably 51, 52 is my guess. Then you'll probably bleed back, something like this. It doesn't have to be exactly. Just don't quote me as I said exactly. And then a drop and then a retest and a run again. And that retest brings you again, and we saw it with the fractal, right? The flip fractal, right back in the trend, right? Wherever that may be. I don't know if this helped you guys a lot tonight, but I think I'm gonna cut it here. Unless you guys have any questions or anything like that, we can run through those relatively quickly.
It was a refresher, senor. It's been a while.
Bro, he's a robot. Thank you, Will. This was amazing. Really good.
Yeah, I hope I was thorough this time. Like I felt like I wasn't as thorough last time. Any has
Man,
anybody got any feedback?
That was just next level amazing, and just appreciate Profits for hosting you, and just appreciate the time. Well, like it's just thank you.
Yeah, no problem. I mean, even if there were things that people didn't like feel free to like voice your stuff. Like it's better for me, helps me grow. Like I'm not here to ask for praise. I'm just I'm always looking to improve. So if anybody had any comments on that.
Man, I think you've nailed the delivery. Like you've just you're well rehearsed in it. And you've just you got it down pat. Like no one else explains these things. You take something complicated and just make it for the masses to understand.
Yeah, I try to make it as simple as possible. Again, a lot of people ask me how I read flows and momentum. Again, it's all about your supports and your resistances, and is your strength favoring your trend. Like these That's what gives me the ultimate, like, are the flows there? Are they present? If your strength doesn't match your trend, then there's a problem going on there, right? Like there is probably some real manipulation there. But because there's such a strong correlation between strength and trend at the moment, um, I think just so many people are just getting this wrong. And ultimately, I'm here to help people. I'm not here to laugh at people. That's never my MO. I don't want to laugh at people. I don't want to see people lose. I want to see people win.
That's that halo chasing you around again.
You're the man, Will. Thank you. This will be available in the Discord too, the recording.
Yeah,
So
I'll be faster about it this time.
no worries. All good. Thank you again, man. Appreciate it. Everybody have a good evening, and we'll see you tomorrow on the show.
Good night.
And if you guys have any feedback for Will, just leave it in the Discord and he will get back to you.
For sure. Yeah, definitely do that.
Thank you. Have a good night. Peace out,
Appreciate it.
everybody.
Thank you.
Thanks, man.